Devin Choksi from KI Choksi Shares and Securities now joins in. Devin, hi, good morning. We've seen quite a bit of one-way rally from the recent lows of 8,500. It's been almost 400-point move now. Do you think it's time to book some profit, or would you expect one more round of pre-budget rally as we head into the 28th February budget?
Yes, good morning, Anuj. Well, I think if you look at the global perspective and the local developments, both of them are suggesting that the environment is becoming more conducive than before, which is also getting reflected into the rally which you mentioned just now. Globally, what we are finding is that to a greater extent, I think the situation is coming under control with the with the Ukraine crisis, I think going out of the way. At the same time, I think the Greece is likely to also, I think, be taken care of, and the cross-currency fluctuation in the behavior, I think, which was basically affecting the global portfolios, that is also coming under decent control. So, which is promising higher amount of allocation of funds into emerging markets like India. At the same time, locally, with the prospects becoming brighter for amount of fiscal deficit management, because largely due to, I think, higher amount of auctions of the kind of auction that they are doing into the coal mining, that is resulting into better prospects going forward. I think the fiscal deficit would remain under control, and at the same time, I think the interest rate would come down eventually because of the management of proper inflation at this point of time. I would think that I think both these factors are helping the market to remain confident, and maybe budget related kind of event would be definitely looked out for from the perspective of seeing how exactly the further growth measures are taken by the government. So overall, remaining positive, maybe some consolidation and then an upside, I think that one can call for. 9,000 would be a good level to watch out for. If it crosses, then probably I think we'll see further upside in Nifty from current levels.
By the way, the Nifty is coming off a bit. It currently stands at 88.25. The intraday high was 88.70, which means it slipped close to about 0.5% from its high. A similar story in the mid-cap index as well. And a few banking names like Axis Bank, State Bank of India have come in for a bit of a correction. And other names included DLF as well as BPCL. These stocks are off from their early highs.
Actually, the Bank Nifty Lima is down 1.3% from the morning high. That's the culprit. If you see the intraday chart of the Bank Nifty, that's dragged the market single-handedly. That's down quite a bit from morning highs.
And if you see the individual contributors, Axis Bank and ICICI Bank, State Bank of India, Bank of India, all these stocks are off, close to about 1.5% from the high point of the day, at least in the last 30 minutes or so. David, your thoughts on the Bank Nifty? Is, Anuj has been telling us the markets would have been at their highs at 9,000 levels if it wasn't for the Bank Nifty. What's the approach to the PSU banking space as well as the private sector banks?
Well, I would think, Rima, that the PSBs definitely, I think, demand consideration at the highest end. That is, I think, top end. Probably, I think, large banks, large PSBs, I think, would probably be the beneficiary of the higher number of growth projections that we are talking about. What we saw in case of SBI's result other day, I think, is a validation of viewpoint here, wherein we believe that I think the higher growth rate will help those people who are having higher size book, and at the same time I think the acceleration in the credit is likely to take place. So the better growth rate would basically benefit those who are having the larger size book. So the focus would remain within the PSB with the large size bank. At the same time, I think in the private sector, the business model is quite decent. So I think 25-30% kind of a credit growth in a good economic environment is distinctly possible, at least with, I think, first 3-4 banks which we are talking about. So I would remain positive in the banking space. Maybe corrections of any degree would be an opportunity to consider them accumulating into the portfolio for investment for at least 2 to 3 years and above.
Okay. Devin, post the deal in Suzlon, do you think it's time to take a fresh look at this one, or would you give it a pass?
Honestly, Anuj, I haven't looked into the valuation perspective of this particular deal. So, and also I'm not totally sure about, I think, how exactly the debt component of the company would be taken care of in times to come. But one thing is for sure that I think when the strong promoter join hands, I think at that point of time, I think one should remain really more confident about the company. So this is an area where I think one can definitely look into. But as I said that I have not gone into the details, so won't be able to talk anything on specific about this company.
Actually, Devin, a lot of these real estate companies have reported a decent set of, earnings this quarter and operational improvement, in HDI, even in Orbit Corp. We were speaking to the management today, and that stock is also higher by close to about 12%. Were you positively surprised by the improvement in the real estate companies' earnings? And is that a segment that you will back going forward?
Well, I think once again, very important aspect out here is the balance sheets of some of the real estate companies. If there is an asset-light model which is being continued by some of the companies, I think there the confidence level is relatively higher compared to those companies which are purely working on the land bank kind of a situation, and I think trying to make most out of it. As I see, as far as the sector is concerned, I think the FSIs are being opened up by the government, and that possibly I think puts a cap on the kind of a land price appreciation that otherwise I think used to be driving the kind of valuation for the companies which were holding the land assets. According to me, I think that's an area which is going to be more important going forward in the real estate business, and that's where I would think that the pure asset light model, I think, of those companies would probably make more sense for investors to stay invested with. I think selective approach will have to be adopted. Largely we are confident about the residential space vis-a-vis the commercial space even as of now, and if one wants to be relatively safe, I think with a higher amount of margin of safety, I would consider that I think mortgage based finance companies, I think the housing finance companies would be a better play for riding this particular upside into the real estate business.
Okay, Devin, in terms of Nifty stocks this year that have done well, you have an HCL Tech that's up 25%, Lever is up 20%, and you have Wipro that's up 20%. Are you sensing a bit of leadership change for the market, and or do you think this is just a temporary phase, and will banks, domestic cyclicals be back in terms of leadership? For the rest of the year, what would be your big portfolio call?
It's a good question. I think according to me, some of the cyclicals, particularly the old economy stocks within that infrastructure asset ownership business, is definitely showing more amount of promise. Given the fact that I think many of the power generating companies are available at a valuation which is quite attractive compared to the new capacities which would come up. I think they are available at a very attractive valuation, and given the possibility of fuel linkages, and given the possibility of I think the power tariff linking to the fuel prices, I would think that I think the kind of a re-rating should be possible in generating companies, and that's where I think that one could argue for a good opportunity for investment into them. Of course, I think the quality of the balance sheet does matter here while selecting the stocks, so there is a care required on that particular aspect. Similarly, I think the port business within the asset ownership space I think would hold a lot of importance given the kind of a program that government is talking about, connecting the ports and promoting the waterways for transportation and logistics. So my reading says that I think that's an area which one could probably look at I think more systematically for building the portfolio. We certainly like I think the companies within this space for adding into the portfolio, and would consider add into the portfolio when the opportunity comes along with the valuation.
Okay, Devin, we'll leave it at that. Thanks so much for joining in. Any disclosures?
Thank you. Well, I haven't spoken about any company in particular, but still request investors to I think look at I think whatever the companies they invest in based on my direction or guidance, I think with a proper research and taking consultation from their advisors.
Okay. Thanks so much for joining in.